Good morning and happy Monday, July 21st. Andrew Marquis, CrossCountry Mortgage, giving everyone a rate update for the week and product alert. So here we are, crazy, already 2/3 of the way through July. It seems like summer is flying by. Business has been busy. It's stayed steady. I wouldn't say it's as busy as May and June, but it's certainly still steady. And as we had predicted, rates are starting to come down. And I think they could come down some more this month as well as into August. So starting with rates today, conforming loans, $806,000 loan amount or less with 1 point. 30-year fixed is at 6.4, 20-year 6.125, 15-year 5.49, 7-year ARM 6.25, 10-year ARM 6.375. Moving on to jumbo, rates are a little bit lower when you borrow more money, $807,000 or higher. 30-year fixed with a point, 6.125. 10-year ARM, 5.5%. 7-year ARM, 5.25. 5-year ARM, 5.125. So some really aggressive rates on jumbo. What we're seeing a lot lately is a lot of listings are sitting. I think inventory has improved. I think a lot of people are now traveling for the summer, and we are seeing some listings sit on the market longer. So what are we seeing? More seller credits. What are seller credits being used for? Closing costs, points to buy down the rate. But what we see a lot of now is temporary buy downs. Let's buy down the interest rate for the buyer for the first 1, 2, or 3 years. 2-1 buy down, for example. If rates today are 6.5%, 2-1 buy down is going to be 4.5% in the first year, 5.5% in the second year. Buyer is going to save a ton of money on their monthly payment through that credit and that much lower interest rate for the next 2 years. If the buyer refinances out of it within the 2 years, they get any of that credit money back to them as a principal reduction on their refinance against their loan amount. Another thing we're seeing is a lot of other lender fallout, denied loans, condo issues, and a lot of circumstances where buyers say, I've talked to 3 lenders and they can't help me. And this is where we go into our non-QM. And the product I'm going to highlight today is asset related. So we have a lot of clients that, they might be older, they might be younger, they might be out of work, they might have a really low fixed income. If you have substantial assets, we can lend based on that. I had a couple of clients recently, divorced clients, where it was a new divorce. They didn't have a history of receiving child support or alimony, but they had significant assets. They sold the marital home. They had proceeds. They split an old retirement account with the ex-spouse. Because they have those assets, we can give them a loan based on that. So if other lenders are saying no or maybe or I'm not sure, chances are at CrossCountry Mortgage, we have a solution through our non-QM programs. So if you have questions for my team and I, you know how to reach us. It's themarqueeteam.com. And I hope you all have a great week ahead. I'll talk to you soon. Thanks a lot.